using life assurance bonds to mitigate or avoid Spanish wealth tax. My name is Patrick McDonald and this is FinanceSpain.com. So, how can we reduce the wealth tax burden of an individual or family here in Spain? This has to be one of the most common questions we get asked. Of course, it tends to affect those with generally higher net worth and requires some careful planning. One possible solution is to use a unit-linked Spanish-compliant portfolio bond. This could be a standard tax wrapper for a client's investments, but with a few vital adjustments to minimise their wealth tax liability. Now, based on the current wording of the law and the interpretation we've seen by the Spanish tax authorities, a client can set up a policy with firstly, no surrender right, secondly, no pledge rights, and thirdly, no right to change beneficiaries, all for a minimum period of 3 years. Further to that, the policy would typically have the client as sole irrevocable beneficiary so that he or she would have the right to encash the policy in full at the end of the 3rd year term. So to explain how this works, the wealth tax calculation is based on your worldwide assets at the 31st of December each year once you become resident in Spain for tax purposes. Now, having given up all surrender rights to that investment policy for a minimum of 3 years and declared an irrevocable beneficiary, then during that period, the policy, on December the 31st each year, has effectively zero value to you and should therefore not be included in your wealth tax calculation. During that time, we manage your portfolio according to your attitude to risk and an investment strategy that we both agree upon at outset. Having said that, we do understand that temporarily giving up access to some of your assets could make you feel uncomfortable. So it's our priority to make sure you understand all aspects of the process, including the strict investor protection protocols that are in place. One caveat to bear in mind is the Spanish government are considering introducing new legislation to prevent this type of mitigation, but as we speak here in 2020, the method is still viable. So if this is an issue that affects you, please do give us a call. It's confidential and we'll go through the options available to you. And if you want to learn more about Spanish wealth tax mitigation strategies, in the next video I'll explain how to utilise the 60% rule. So bye for now.